Have you ever wondered why some traders seem to make profits effortlessly, while others, despite hours of studying charts and strategies, keep losing? Let me tell you a story. A few years ago, I met a trader named Daniel. On paper, he had everything: a solid strategy, access to top indicators, even mentorship from experienced traders. Yet month after month, he was losing money. One day I asked him what happened during trades. He said, "I just freeze. I overthink. Sometimes I panic and exit early. Other times I hold on too long." Daniel's problem wasn't strategy. It wasn't money or market conditions. It was his mind. In Forex trading, your psychology, the way you handle fear, greed, and pressure, can make or break you. And that's exactly what we're diving into today: mastering the trader's mind. One, understanding Forex psychology. Most beginners focus on learning indicators, reading charts, and finding the perfect strategy. But what separates consistently profitable traders from the rest isn't just strategy, it's mindset. The Forex market is a battlefield, not just of numbers, but of emotions. Fear, greed, overconfidence, doubt, these are invisible forces affecting every decision you make. The moment you let emotions drive your trades, you're no longer trading logically, you're reacting. Think about it. A trader enters a trade based on a signal. The market moves slightly against them. Fear creeps in. Suddenly, instead of sticking to the plan, they exit too early. Or, when a trade moves in their favor, greed tells them to hold, hoping for more, only for the market to reverse. Mastering your mind is about controlling these impulses, training your brain to stick to the plan, and viewing losses not as failures, but as lessons. 2. Common psychological traps in Forex. Let's break down the most common psychological traps that destroy traders. Fear of loss. This is the number one killer of profits. Fear makes traders exit trades prematurely or avoid taking trades altogether. If you're scared to lose, you're not trading. You're guessing. Greed. On the opposite side, greed makes you hold winning trades too long or risk more than you should. Chasing just one more pip can wipe out days of profits in seconds. Overtrading. Some traders think more trades equal more profit. The reality? Overtrading is often driven by boredom, impatience, or trying to make back losses. Emotions, not logic. Revenge trading. After a loss, some traders enter new trades impulsively to get back the money. This rarely works. Emotional trades are almost always losing trades. Confirmation. Bias. Traders often ignore signals that contradict their beliefs, focusing only on information that confirms what they already think. This is dangerous because the market doesn't care about your opinions. Recognizing these traps is the first step. Awareness gives you control. Once you understand the emotional triggers, you can train your mind to react differently. 3. Lessons from profitable traders. So how do top traders control their minds? Here are lessons from the pros. Accept losses as part of the game. No trader wins 100% of trades. The most profitable traders don't fear losses. They calculate risk, accept it, and move on. Follow a plan, not your emotions. Every winning trader has a trading plan: entry, exit, stop loss, and position size. They follow it strictly. Emotions are like a storm. If you try to fight them, you lose. If you respect the plan, the storm passes. Journaling your trades. Writing down why you entered a trade, what you felt, and how it ended helps you see patterns in your own behavior. This is how you catch emotional mistakes before they become costly habits. Patience and discipline. Markets don't owe you money. Successful traders wait for the right setups, even if it means sitting out for days. Discipline is more powerful than any indicator. Mental resilience. Even after a losing streak, professional traders don't panic. They don't chase losses. They stick to the plan, stay calm, and trade again when the opportunity arises. These aren't secrets. They're habits. And habits are built over time with consistent effort. 4. Practical techniques to master your mind. Now let's get practical. How can you train your mind for consistent Forex success? Set risk limits. Decide before every trade how much you're willing to risk. Stick to it. This removes fear and prevents greed-driven decisions. Use stop loss and take profit. Don't negotiate with the market. Set your levels and honor them. This creates discipline and takes emotion out of the equation. Meditation and mindfulness. It might sound unrelated to Forex, but mindfulness helps you recognize emotional reactions before they control your actions. Even 10 minutes a day can improve focus and decision-making. Visualize success and failure. Before trading, imagine both winning and losing trades. This prepares your mind to stay calm regardless of market movement. Break trades into rules, not outcomes. Don't obsess over profit or loss per trade. Focus on following your strategy consistently. Over time, profits follow. Keep a trading journal. Record entries, exits, emotional states, mistakes, and lessons. Over weeks, this becomes a mirror of your trading psychology. You'll start seeing emotional patterns before they cost you money. Avoid social media noise. Other traders' opinions can trigger doubt or greed. Focus on your plan, not someone else's opinion. Remember, the market is neutral. It doesn't know you exist. Your mind is your battlefield. Train it well, and you'll trade confidently. Ignore it, and even the best strategies will fail. 5. Motivation and mindset shift. Here's the truth. Forex isn't a magic money-making machine. It's a reflection of your mind. If you want to succeed, you need more than strategies. You need mental mastery. Every loss is a teacher. Every mistake is a lesson. Successful traders don't fear failure. They learn from it. They know that discipline beats emotion every single time. And the good news? This is a skill you can develop. Think of your mind like a muscle. At first, it will resist change. Fear, greed, and doubt will push back. But with consistent training, following your plan, journaling your trades, and practicing mindfulness, you'll build mental strength that outlasts any losing streak. Here's a powerful thought. Most traders quit not because Forex is too hard, but because they couldn't handle themselves. Don't be most traders. Be the one who masters their mind. Be the one who stays calm while others panic, who follows the plan while others chase losses, who turns mistakes into lessons. Every great trader started exactly where you are, unsure, emotional, and making mistakes. The difference? They trained their minds. They mastered themselves before mastering the market. So today I challenge you, don't just learn strategies. Don't just memorize indicators. Start with your mind. Identify your emotional triggers. Practice discipline. Journal your progress. And most importantly, remember, your mind is the most powerful trading tool you have. Master it, and the market becomes a place of opportunity, not fear. Lose the fear, control your emotions, and watch your Forex journey transform. If you take one thing away today, let it be this. The Forex market isn't your enemy. Your mind is. Control your thoughts, master your emotions, and the profits will follow. Start small. Journal your trades. Practice patience. Follow your plan, even when fear or greed whispers in your ear. If this video inspired you, hit like, subscribe, and share it with a trader friend who needs to hear this message. Remember, mastery begins in the mind. Train it, and nothing can stop you.